Enphase reported earnings after the market closed on Tuesday, and as expected, it was a really bad quarter. Really, no way around that. And it's expected to get worse in the first quarter. The good news is the first quarter of 2024 is probably going to be the low point based on what management is expecting for the back half of 2024 and the channel inventory, basically Enphase's customers working through the inventory that they have in stock. So eventually they need to buy product again, and that will probably start to pick up at the end of the first quarter, beginning of the second quarter. And it's looking like things are going to get a little bit better by the second half of the year. But there's a lot to digest here, especially if some of the comments from the conference call, which are really stark about what's going on, particularly in California, how quickly the solar end market has just been decimated there. But the good news is they're selling more batteries. So a lot of things to digest, whether you're looking at Enphase or one of their competitors like SolarEdge or one of their customers like a Sunrun, SunPower, or Sunnova. This is really the first peek into what's going on at these companies this quarter. And I think we can take a lot from it, and it's probably going to get worse before it gets better, but there's at least some hope on the horizon. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they're going to give you their top 10 stocks to buy right now. So let's go right to the release, and then I'll give some comments from the conference call that I took away as well. This is the earnings release, and the big numbers you can look at right here in this section. Quarterly revenue, $302.6 million. Guidance was for $300 to $350 million in revenue, so it came in at the low end of that. Gross margin on a GAAP basis was 48.5%, on a non-GAAP basis, 50.3%. That's a really critical number because Enphase is still generating very high gross margins, whereas you see something like SolarEdge said that they're going to have sales fall just like Enphase did, but their margins are also getting destroyed as well, both on a gross perspective and an operating perspective. So good to see that Enphase is maintaining those strong margins. Despite the drop in revenue, there was also net income, $20.9 million, and on a non-GAAP basis, $73.5 million. So pretty strong results given how quickly revenue is declining. Free cash flow was also positive at $15.4 million, and the company bought back about $100 million worth of shares out of $1 billion that has already been authorized. There was a bunch of details in the conference call. I'll get to a few of those in just a second. But the other thing that we were looking for was what is guidance for the first quarter of 2024? And these are the numbers right here. Revenue is going to fall again to about $260 to $300 million. But gross margins are going to maintain at a relatively high level, 42 to 45%, with a benefit from the Inflation Reduction Act. That's something that's going to be impacting all these companies because they're manufacturing in the US. So they're getting a bunch of benefit from that. Non-GAAP basis, the range is going to be 44 to 47%, and excluding the IRA, it gets down to 40 to 43%. On a GAAP basis, operating expenses is going to be $144 to $148 million, and non-GAAP in the range of $80 to $84 million. Management did say that they were expecting to cut those non-GAAP operating expenses from about $100 million a quarter down to $75 to $85 million a quarter. So that's a more structural change, part of layoffs that were announced in December. There were a couple of really big points that were talked about in the conference call, specifically end market demand for products in the US and where that is trending. And there's really a tale of two cities here. There is the California market, and then there is the non-California market. And I'll just go through exactly what they said in the conference call. In non-California states, sell-through, so that's sell-through to end customers, not necessarily the sales that Enphase is making to its customers who are the actual installers, but sell-through to the end customer was down 1% compared to Q3, so sequentially down 1%. Inverters were flat, and batteries were down 8% for the quarter. So batteries is a little bit smaller business. That was down a little bit more than the microinverter business, which was relatively flat. In California, however, sell-through was down 7%. Here's where the numbers get really weird. Microinverter sales were down 27%. So that's telling you that solar installations were down around 27% in the state of California. This is the biggest market by far in the US. The good news is that battery sales increased 58%. So this is the impact of net metering 3.0 in effect right here. What net metering 3.0 did was made it less economical to send electricity that you're producing on your roof to the grid. It made it more economical to store that energy and then use it yourself later. That's exactly why batteries are now more economical in California than they were previously. The other region to look at is what's happening in Europe, because Europe looks a lot like California right now, not the rest of the US. In Europe, revenue was down 70%. That's not sell through, that's just revenue for Enphase, but just a staggeringly large number to decline on a revenue basis. Sell through of both microinverters and batteries to end customers down 20%, so closer to California than the rest of the US. Microinverters specifically down 23% and batteries down 2%. So that's really the story here, is that California and Europe have just been absolutely decimated from net metering 3.0, and then both policy changes and higher interest rates that are affecting both of those regions. And Enphase is seeing the impact of that right now. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. So what in the world should we be thinking about solar companies and Enphase Energy right now? It looks like the first quarter is going to be kind of the bottom for the industry. And so we have things like winter months, installers selling through a lot more of the inventory that they had in stock. And so Enphase is going to have a little bit of a delayed reaction to some of the installers. So we'll see what results look like from Sunrun, Sunnova, SunPower. See if they have things at least picking up a little bit, because it seems like there's starting to be some momentum. They're figuring out how to sell into California, and then the rest of the country is not doing nearly as poorly as California. So those are the US-based installers. Europe will see a little bit more when a company like SolarEdge reports. But I think the question for Enphase is, how quick is this recovery going to be? And what are financials going to look like when the recovery does take place? I'm going to just give some numbers here. Cash and marketable securities at the end of the quarter for Enphase was $1.7 billion, and the company's market cap is still $13.7 billion. So the company is profitable, but not very profitable, and revenue is still declining. Now, you could make the argument that they're going to get back to the profitability point that they were just a few quarters ago, but the offset to that would be that they actually reduced their manufacturing capacity, their third-party manufacturing capacity in the US by about 30% in the quarter. So they're not seeing this demand long-term come back in maybe the same way that we had 3 or 4 quarters ago. Interest rates are likely going to be structurally higher than they were back then. We have structural changes in California that probably means the market is not going to be quite as big as it was. So I think we're going to see a recovery in the solar industry, but maybe not the kind of recovery that would bring a stock like Enphase Energy back to where it was at its peak. So if we're not going to get back to those peak levels, then it may be that Enphase Energy doesn't ever get back to the profitability that we saw peak in 2023. The company's peak net income on a trailing 12-month basis was $573 million. So at today's market cap, even if you pull out cash, the company is trading for 21 times peak earnings. And it looks like we're not going to get back to those peak earnings numbers. Remember, yes, the battery business is likely going to be bigger than it was previously, but batteries are typically much lower margin than the microinverter business. So this is really, I think, the challenge for a company like Enphase. Yes, results are probably going to get better starting in the second quarter of 2024. But how quickly are they going to get better? And what is the scale of that improvement? Do we have upside to get to $500 million in net income on an annualized basis? And I just don't see a path to that right now. So that's ultimately what's going to keep me out of shares until we get to the point where this is an absolute no-brainer from a valuation perspective. And I just don't think that we're there yet with Enphase. We'll see if we're there with some of the other companies. The installers in particular have just been absolutely destroyed. So there may be a little bit more of a value play on that side, but we'll see what their results look like, because they could be in financial trouble. SunPower specifically is one that's facing a lot of challenges in 2024. But that's my early thoughts on Enphase's results. We'll see how this ties to all the rest of the industry when all these other companies report. But what do you think about Enphase and the state of the solar market right now? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.